Okay, we're going to go through the basic use of the software today, and it's a basic six-step process that I'm going to walk you through. The first step is going to be using the search wizard. This is the blue wizard. I'll show you in the software, and I'm going to show you the 4 basic search parameters that we always start with when we're searching for option trades. I'm going to show you how to save those parameters so that you can reload them each time you come in to do a new search. And then once we've narrowed down and gotten rid of the stocks we don't want to see, the stocks that are left we want to save to a user list so we can start looking for the repeating price movements in those particular stocks. Once we've got a user list, we're going to move over to the cycle wizard. I'll explain what the cycle wizard does. That's critical in knowing how to use the cycle wizard, is understanding what the cycle wizard is doing for you. And I'll show you how to manipulate the settings in the cycle wizard to search for particular movements that you may be expecting in the current market. Once we've run the cycle wizard, we're going to want to view the results, and typically we're just looking for the current month or the next month out on repeating patterns. And while we're in there, I'll show you how to save those trades or those results, or you can export them to an Excel spreadsheet, and I usually like to print them out on a sheet of paper. And then we want to take those particular moves that we found for the current month or the upcoming month, and we're going to analyze and pick out the best 5 to 10. Usually I like to have a watch list of 5 to 10 that I'm keeping track of to look for my entries and exits. And so I'm going to spend probably half the time today showing you how to analyze the moves that the cycle wizard found using both the seasonal chart to look for historical price movement and also what I call the 3-line, it's also called the long-term chart, to look at the current price movement. It's critical to look not only back in time but also to look at what it's currently doing in choosing these trades for our watch list. And I'll show you how to determine which ones of the identified moves have the best strength, the best consistency, and the best pattern of movement. And then once we've got a watch list of 5 to 10 stocks, we may have a few that look like they're getting ready for an entry point, and so we want to start thinking about a strike price. And so the last step I'll cover today is showing you how to look at the average percentage of the historical move, look at the current volatility of the price movement, and then finally using the what if button to narrow it down to the perfect strike price that's going to give us our best risk-reward capability. So let's jump over to the software. And I'm going to quickly go through and cover, just kind of give you a tour of the different icons here, each section of the software. The first one I call the green telephone. This is where you do your data download. You don't have to download your data every day. If you're missing 2 or 3 days, it will know that, and it will pick up whatever data is missing. Your download is available anytime after 6 p.m. Eastern. It's a once-a-day process. It's an end-of-day system. So if you run this during the day, it's not going to bring in that day's price information until after 6 p.m. All you have to do here is hit the start button and let it run, and it will tell you once all the data has been downloaded. And your download is a 2-step process. Once you've completed the data download, you need to close that and go to this third icon, which are the folders. And the software needs to re-index that new data that you just brought in. So typically, there's no need to change any of these settings. Just leave everything checked as it is, hit the start button, and it will re-index all of that new information. If you go too long without re-indexing, it can cause some glitches in your search results eventually. So it's just a good idea that every time you do a data download with the telephone, your second step is to come over and re-index that data. And the other part of the database utilities is there's a section here where, for instance, if you find a stock that no longer trades, it's in your database, you can come over, type the symbol in here, hit your enter button, and it will bring up the information for that particular stock, and just hit delete, and it will take that out of your database if it no longer trades in the market. But most of the time, you're going to just be using the reindexing function here. Let's back up one icon. This is the program options section. And there's several different settings in here. For the most part, anything that says short-term or swing trading, we're not going to be using for options trading. That's sort of an older method that was built into the software for swing trading, and there's not many people using that these days. So none of these sections are really going to help you with options. This program settings, however, there are a few things in here that you should be aware of. First of all, you can set your charts to default to a certain time frame when you open them. Again, the short-term chart is the same thing as swing trading. The short-term is this candlestick icon up here, and it shows you a candlestick chart. The long-term chart is what I call the three-line chart, and I typically like to have mine open up on a 6-month time frame. Again, on the three-line chart, I'm most interested in the current price movement. I'm not concerned about what the stock was doing 2 years or 5 years ago. So I typically am looking at either a 6-month or a 3-month chart on this because I'm looking at the current price activity. Now there is one feature on this time frame drop down that you can pick. You see it's anywhere from 3 months to 10 years or all data. There's also an auto feature. And the auto feature was built in to look for particular price patterns, but you have to tell the auto feature what time frames you want it to look back over. Now, a price point here is a trading day, and there are average 22 trading days in a month. So you can see I've got my auto feature set to look at nothing less than a 2-month chart, 44 trading days, and nothing more than a 6-month chart. That's the time frame that I wanted to analyze if I'm using the auto feature. The other thing here that I like to set is automatic updates. Whenever you open the software, it goes out to our server in the background and checks to see if there are any new updates to the software. I like to have mine set on notify. You've got a couple of other choices here, but if you set it on notify, you'll get a little bubble that pops up alerting you that there's a new update for the software, and then you can either go ahead and install it at that point or do it at a later date, but at least you're aware that there's an update. Any changes that you make to this page, you need to make sure to save them with the Save Program Options button down here at the bottom. And chart indicators, some people like to put indicators on their charts. I don't like to do that in Best Choice. I keep all my indicators on my Thinkorswim charts. They're a much better charting program than Best Choice. We've never professed to be a premier charting program. Best Choice, we use that to identify the stocks that we want to watch. I use Thinkorswim for all my charting and technical indicators. So, but this, you do have the ability to put moving averages or different technical indicators on your charts if you want to. I like to keep my charts clean in Best Choice. All right, that's pretty much the areas you would be using in here. I'm going to skip over the next 3 icons because we're going to be covering those. The Transaction Manager is kind of an old area of the software to keep track of your trades, but you have to manually type everything in. And these days, if you're doing online trading, your broker's keeping track of everything you do anyway. The next icon is a basic bar chart, not linear or anything, just a regular bar chart. Then, of course, we have our linear chart. I call it the 3-line chart. Our candlesticks, which again was built for swing trading, but if you want to get a quick look at candle patterns, you can flip over to this chart and see things like a bearish engulfing pattern up here on this particular stock. And then, of course, our seasonal chart. This next icon, there are some advanced uses. This is where you can view the raw data that gets downloaded every day. And again, there are some recorded webinars on our website that I'll show you in a minute. And in one of those webinars, I did go through some advanced uses of manipulating the data here and doing some back testing. But we're going to stick to the basics today. today, so I'm not going to cover that. Now, the puzzle piece, this is an icon that you may use from time to time. Let me explain what this does. If you ever bring up, especially a 3-line chart, and you see some sort of anomaly on the chart, like for instance, occasionally I'll get a chart that has a daily bar that goes all the way from the top to the bottom. Now you have to be careful because we had the flash crash back in May, and that actually has happened to some of the stocks. They had a high and low that spanned the whole range of prices here. But sometimes that can be caused by corrupted data on that particular day. And rather than have to use your green telephone to correct the data that may be corrupted, you can use this puzzle piece. When you click on it, it brings up a dialog box. And you can use this anytime during the day. You don't have to wait until after 6 p.m. But what this does is it will re-download all the data just for that individual stock. And so you just hit download, and this works anytime during the day. And once it's finished, whatever anomaly you were seeing, if it disappears, then it was corrupt data. If it doesn't go away, then there's something else going on with that stock that you do have the correct data on that. Now let me skip over this extensions. This is your option chain right here. And I'll go back and show you in a minute. There's two choices in where to get your option chain data. But when you click the option chain, it brings up the option chain for this particular stock that you have the chart up for. Shows you your different expiration dates here. So you can click to November. There's January. And it brings up first the calls. If you are looking for puts, you want to go up here and click the Show Puts button. And then it will show you the pricing for the puts on that particular stock. Now, there are two different sources of information to populate these charts. This one is what we call the 20-minute delay chart. And this one is usually a little bit more stable. But if you wanted to switch, if you have a Thinkorswim account and you wanted live option information, if you go back to Program Options and go down here to Security Options, this is where you choose where the information for your option chain comes in. You can see I've got mine set on 20-minute delayed. You can use your Thinkorswim account and put in your username and password, and it will pull the option chain information in from Thinkorswim. However, we've had some glitches with this link. Thinkorswim sometimes tends to time us out of our login when we're linked into this, and so you may end up getting either a flashing, your option chain will start flashing when you're logged into Thinkorswim, or I've had this happen to me before, where all of a sudden a lot of these different cells just go to question marks. So if you're having problems with your option chain, the first thing to check is go back to your program options and see if you're logging in through your Thinkorswim account. If you are, I would recommend switching it back to the 20-minute delayed, because it's a much more stable source, and option pricing doesn't change that much in 20 minutes. If I'm actually going to make a trade, I'm going to be doing that on my broker's website anyway, and that's going to give me the live pricing information. Typically, I'm only pulling up the best choice option chain when I'm ready to start picking or looking at strike prices. And 20-minute-old information is not going to change my mind one way or the other on determining a strike price. So, okay, let me do this, and I'll go back to the extensions. This very last one over here, the magnifying glass, this is your user list manager, and there are a lot of different features that you can use in here. I'm not going to cover most of these today. We're sticking with some basic stuff. Again, I have a recorded webinar on the website that goes into detail on using a lot of these different features. use this the most for, you can see these are a list of all the user lists that I have created over the past week or so, couple of weeks. Eventually, you're going to end up with a whole bunch of user lists. You're going to want to get rid of the old ones. And this is where you do it by going to the magnifying glass. So if you want to get rid of a list, we would just pick one. Let's say Dave September Puts, highlight that list, click Delete, and it will get rid of that list. And supposedly, they just built in a new feature where we can highlight several lists. This is something I've been asking for a long time, that we should be able to shift. Oh, yes. This is great. We used to have to do them one at a time, which is a real pain. Now, if you want to delete like a whole month worth of lists, you just highlight it, click that, and delete both of them. Cool. All right, well, let me go back to this icon that I skipped. This is long-term extensions or long-term option targets. Now, this icon was originally built to help us pick strike prices on leaps, long-term options. And in order to do that, we typically are looking at either a 5-year or longer chart. Let me find a better chart to work this with. Let's do all data here. Bear with me. I want to find a chart that will best exemplify what this thing does. Now this one might work. Okay, it looks like I've got about 10 years worth of data. Now originally, to use this icon, we would want a very long-term chart because again, we would be trading a long-term leap. We kind of look at the chart in the time frame of what we want to trade. If we're looking to get in a directional option trade where we want a position for anywhere from a few days to a few weeks, we want to be looking at a shorter-term chart, like a 6-month or 3-month. If we were looking for long-term buy and hold investing, we want to be looking at long-term charts. And again, for long-term leaps, we would want a longer-term chart. So when we have a long-term 5, 10, or all data chart up, and we click this extension icon, okay, I've got to change a setting here. 1 second. Now let's try it. There we go. When we click that icon, what it does, it projects the price, the direction of the price movement out into the future. You can see here we are today, but this is projected all the way out to 2012. And so this was originally designed to help us determine if the price keeps moving in the same direction, where could it be by 2011, 2012, and help us set strike prices long term. Now, what happened when I first clicked this is I had it set to look at a shorter time frame than 2 years. This is a new feature that I've just started playing with. Go back to our program options. Right here where it says option extensions, this tells the software how far out we want those lines to project. And so if we tell it to force, let's say a 3-month projection rather than 2 years, then this might help us if we're looking for more of an intermediate term option. Let's say we were looking at a move that tended to last 2 or 3 months when we looked at a seasonal. And so maybe we're looking at a January expiration rather than an October or November. So again, we would pull this back down to a 6-month. I would probably even go a little longer if I was going to look for let's say a January. Let's find one that's got a little better slope to it here. Okay, this one will work. So I've got a 1-year chart, and I've told the extension to only go out 3 months now, not all the way out 2 years for long-term leaps. And so again, I've just started playing with this, but this may help us set a more intermediate strike price or an intermediate expiration date rather than the current month or the next month out, which would be a short-term expiration date. And it basically projects that price movement on out for a full 3 months rather than just looking at where it currently is in relation to these 3 lines. And you'll understand that a little better once I get into showing you how to analyze these moves with these charts. All right, so that's a quick rundown of all the different icons. Let's get into our 6-step process that we're going to go through every 2 or 3 weeks to develop watch list. And I usually only go through this process every couple of weeks. This is definitely not something you need to do every night because your list is not going to change that quickly. And once we've been through these whole 6 steps, you're going to have 5 to 10 stocks that you're going to be watching for the next 2 or 3 weeks. So you won't need to run this process again until you need a new watch list. Well, the first step is we want to screen out basically stocks that we don't want to see in our sample. And for the most part, those are going to be low dollar and low volume stocks. We don't want to see those. Now, there are 4 basic conditions out of all these 50 or 60 down here. There are only 4 that we typically start with, and most of the time I only use these 4. The first one, of course, is options available. By the way, all of these conditions are divided into 3 categories: long-term, short-term, and both. The short-term conditions were primarily designed for that swing trading method that is attached to that candlestick chart. So when we're doing searches for option trades, most of these short-term conditions are not going to do you any good down here at the bottom in searching for an option trade. I've had people that wanted to use, which one was it? There's one that's like greatest gross profit percent, or highest, largest profitable trade. That looks like a very enticing condition to put on there. But again, this is developed for swing trading. This is not going to help you find the highest profitable trade in options. So most of the time we're going to be using either the long-term conditions or the both conditions to search for options. And the first one of our 4 basic is options available. Obviously, if we're trading options, we don't want to look at stocks that don't have options. So we highlight that condition, click the Add button, and you see it puts it in the upper window. And that gives us about 3,500 stocks. Now the second condition, list by exchange, we're going to add that. And when we do, anything that you're licensed for pops up here. I typically leave everything checked because I want to see as much as possible to start. The third of our 4 conditions is average volume. And when we add that one, you see we get a sliding scale. Now, we don't want to see any low volume stocks because you can buy anything in the market, but when you get ready to sell, if there's only 3 people trading per day, you're probably not going to find a buyer when you're ready to get out of position. So I usually run this up to about 500,000. Doesn't have to be exact, just somewhere around 500,000 per day average volume. And you can see that cuts me about in half on the number of stocks I have available. Now the 4th one is current stock price. And really these 2 are the main ones that you're going to adjust each time you come into this process, depending on what the market's been doing. And my goal here is to screen down until I have somewhere between usually 700 and 1,000 stocks. So depending on how the market's been trending up or down, you're going to have to adjust this price. Now, I've got $24 and up with about half of the in volume, and that gives me 861 stocks to look at. So that would be a good starting number. I want to start with a large enough number so that I get enough trades to go through and analyze and pick my 5 or 10. But I don't want such a large number that I'm going to spend 3 days analyzing charts. It'd be overwhelming to look at 2,000 different charts. So I'm actually going to get a few less here so we can run the next step and don't have to take forever. Get this down to about 700. And then once I've got the number that I like, I want to save that to a user list, and that's this green button down here. I'm going to save those 700 stocks. Now, here's a tip on naming your user list. Remember I showed you the magnifying glass where you can get rid of your old lists. Well, if you don't put a date on it, if you just put a name on all your lists, you're not going to know necessarily which ones are the old ones. So I always start the name with the date. And then I put a name that tells me why I built the list. We'll just call this one 930 Training. Okay, so I've got those 705 saved into a user list. Now before I leave this, if this is the first time you've come in and set up this Basic 4 search, you want to save these conditions so that you don't have to load them individually the next time. So if you use this Save button in the middle, this saves the condition set. This button down here saves the 700 stocks to a list. That gray button in the middle saves the conditions that I have set along with the settings that I adjusted them to, the $500,000 and the $29. And you can see I've already got one here called Basic 4. That's my Basic 4 conditions. And so the next time I come in 2 weeks from now to develop a new watch list, all I have to do is open up the blue search wizard, click Load button, select my Basic 4, and boom, it loads those 4 conditions with the settings that I left them with last time or whenever I saved it. So that's just a little time saver. Now, I'm going to touch on some of these other conditions down here. I encourage you to kind of experiment with them, but be careful. Don't go up here and add 10 conditions at once. Always start with your Basic 4 because you're always wanting to screen out the low dollar and low volume stocks. And if you want to try one or two of these other conditions, just try one at a time so that you have a total of 5 conditions and see what kind of results you get. Some of these conditions, if you use, some of these conditions are opposite each other, so if you use both of them, they cancel each other out. So, it's good to play around and experiment with these different conditions. I sometimes will use these overbought, oversold. This tells me which stocks are currently at the top band on a 6-month chart or the bottom band on a 6-month chart, for instance. But just don't go overboard on the number of different conditions up here. All right, so we've got our 700 saved. Now we want to start looking for the repeating moves, and that's when we go to the pink wizard, the Cycle Wizard. And what the Cycle Wizard does, it goes through the seasonal charts. Here's our 705 stocks. Here's my 930 Training. And the Cycle Wizard is going to go through all 700 stocks, and it's going to look at each stock on these seasonal charts, and it's going to look for repeating moves. It's not only going to look at all 700 stocks, but it's going to look at each month of the year for those 700 stocks. So again, this is just a big time saver. I mean, we could go through, I could have my 700 stocks over here. I could pull up this 930 Training, and for some reason I've only got 658 there. And I could use my mouse and drag 1 month at a time through 700 different stocks, but that, again, would be extremely time-consuming. So the wizard is designed to do that for us. I'm going to go ahead and get this started, and while it's running, I'm going to talk about these different settings here. Yes, you can name it that. Now, before we have the wizard start this search, we want to tell it what type of repeating moves to look for. And that's what these numbers are for. These are the settings to tell it what type of repeating moves we want it to find. The first 2 numbers tell it the length of the move, or the length of the trade. Shortest possible time, 14 days. Longest, 45. So basically we're saying look for anything that repeats itself between 2 and 6 weeks. Now, you can change this short possible trades to a shorter number or a longer number, but Pete tells us that you need to change that in 7-day increments so that you always span the weekend. So the very absolute smallest number we could put in there would be 7. And when you go smaller than 14, you're going to lose some of your probability. And I like to use an extreme example. If we put in 1 day, it said find me any move that repeats on the same day every year, well, there's probably lots of times through the year where stock went up on the same day, but that's not necessarily a pattern. It's such a short time frame, probably a coincidence. And so it's the same principle when you shorten down to 7 days. You're losing some of that probability that it's a pattern, and you may be getting some coincidental movement in there rather than looking for those definitely repeating patterns. The longest possible trades, I've gone up to 120 days looking for long-term, 3-4 month moves. And there are some sectors like the energy sector, the oil companies, that tend to move from the end of March all the way to the 1st of July. You'll look at the chart, and it's just a straight-up line on a lot of those charts. So there are some times when you may want to look for a 2 or 3 month option, and so you'd want to go out longer than just 6 weeks. Now, this minimum rating number, I really try to discourage people from putting much emphasis on that. What this is this number over here on the right. And what I'm going to be teaching you today, or what I am teaching you today, is going to be a lot more detailed way to analyze these trades than just looking at one rating number. We do not pick trades based on just the rating number. And I may be able to show you, if we have time, some examples of how a smaller rating can actually sometimes be a better trade than 10 or 12 rating. So most of the time I just leave this rating number set at 4 because that's not a number that is critical to me making my decision. Now the next number that we have here, the next setting, is minimum win percentage, and a 90% would be a move that repeated 9 out of 10 years. That would give us a 90% win percentage. However, if you look down here, I've got minimum number of years of data 5. I'm going to be looking at stocks that have been only trading 5, 6, 7, 8 years. And some of those stocks may have made the same move all but 1 year. So if I had a stock, for instance, that's been around 9 years and made an 8 out of 9 move, well, 8 out of 9 is not 90%. It's like 87 point something. So if I want to see those stocks that don't have a full 10 years of history yet, but may have only missed 1 year, I'm going to have to change this. And usually if you drop it down to either an 83% or an 85%, it will pick up those stocks that may not have full 10 years, but may have only missed 1 year on the move. And then this last number at the top, the minimum average percent return, this is the average that the underlying stock moved during whatever time frame the move happens. So for instance, if we have a 14-day move, like over here we have a 15-day move, and we're showing a 4.4% average, that means the stock averaged a 4% move in that 15-day period. And we're going to get into more detail on that when we get into analyzing each of these different moves that the Cycle Wizard found. And then if you change either of the bottom two numbers, you need to set them both on the same setting. If you change this to a 6, change the other to a 6. But basically these numbers are telling the wizard, I don't want to see anything with less than a certain number of years of history. And again, it goes back to using the short number of days. It's the same principle on the number of years of history. If you've got a stock that's only been around for 2 years, you might find a move that happened first week in October, 2 out of 2 years, but you've got so little data, you can't be assured that that's a pattern yet or just a coincidence. And so personally, I like to use no less than 5 years of data. If I see something that has moved 5 out of 5, I know that's definitely developing into a pattern that gives me more confidence to get into the trade. All right, so once the wizard is done, one other thing I like to point out before I close the wizard, pay attention to how these months populate. Now, when we run the wizard, we're typically only looking at either the current month or right now, for instance, we'd be looking at trades for October because today's the last day of September. But don't just close the wizard and go start looking at trades. Pay attention to how these numbers populate throughout the year. If you've got 700 to 1,000 stocks here, you've got a pretty fair representation of the entire market, don't you? I mean, this is a pretty good sampling of the market. If people are willing to watch the S&P 500, well, what about the S&P 1000? That gives you a pretty good indication of the entire market. So if you look at how these columns populate, and our first column would be all the moves that tend to go up during the month. This short column are the moves that tend to go down during the month. And if you just look at the patterns here, and for instance, March and April, look at the difference between the up moves and the down moves in March and April. So what does that tell you about the market in general during that time of the year? It tells you that over the past 10 years, that's been a pretty bullish time in the market. And conversely, if you look at months like July or September, you've got closer to an even number of longs and shorts. And usually if I run 900, sometimes these numbers are exactly even. That tells you that that month is probably ends up pretty flat for the month. Now, this September's been a little different, and they've even been talking about it on TV, the best September in 30 years or something. But typically we expect September to probably end about where it started, or maybe even a little bit down, and a lot of volatility during the month. And then what happens when we get into this October-November time frame? Look at the longs compared to the shorts. We typically are going to be going into another bullish period here. And then as we get past Christmas and the end of the year, and we start getting back into the first of the year, typically we start seeing some more volatility in the market in January. Usually February will come up with more shorts than we're seeing here, so usually February looks more like September. So I like to point this out because it's not only the individual trades that you're looking to find, but if you pay attention to all the patterns as you go through these steps, it will help you plan ahead on your trading. When we get towards the middle of the end of February, I'm starting to look for all calls for the next 2 months. I'm generally not looking for any short or put moves in this March-April time period. All right, so we want to see what trades the Cycle Wizard found. We go to the very next icon right next to the pink wizard. This is where we view our results. The first thing we want to do is open the list that we just made. Right there, 9:30. And then we want to go to the month that we're interested in. Let's go to October. So we can see that the wizard found 91 upward moves in October and 11 downward moves. Now, just as I pointed out on the Cycle Wizard, you can kind of plan your trading based on how the market acts throughout the year. Sometimes, especially months like that September that look more even between long and short, sometimes if you pay attention to these start dates, you can even drill down into the particular month. In fact, let's just do this on September. You can see we had 21 long, 14 short, so almost the same number here of long to short. But if you look at when most of the short trades, what's the first date on the short trades? The 10th, 11th, 14th. So typically what this tells me is that September starts bullish, and then about the middle of the month turns bearish. So again, if you just kind of pay attention to the patterns as you go through here and not be so in a hurry to just get to the individual trades, this can help you plan ahead on your trading. That's the whole power of this seasonality, is being able to look back over time. What has the market done at given periods of the year, and how can that help me going into that same period this year? All right, well, let's go back to October here. Now, this is great to be able to view this information, but I want to be able to work with it. So the first thing I want to do is I want to save this particular month to a new user list. And we're going to create two different user lists. We're going to create one for the long positions, or these would be our calls. We're going to create a list for our puts. So there's two different buttons. And again, what's the first thing we do when we're naming a user list? We want to put a date and what we built it for. And we're going to call these our October calls. And we're going to do the same thing down here. It'll be our October puts. And the second thing that I like to do is I like to print these, because our next couple of steps is going to be spending time analyzing these charts. And I'm going to be crossing some of these off the list because there's just something on the chart that I don't like. The ones that I find that I do like, I'm going to start maybe looking for strike prices, or I'm going to make some notes about maybe how they behaved in the past. So I like to have paper in front of me so I can make these notes and develop my watch list. Now, if you're really a detailed person, you can also export all of this information to an Excel spreadsheet. I used to do that, but I found that I just scribbled the sheet up anyway, so I just print it out on a sheet of paper now. And one other cool thing you can do from here, if there's a particular trade that you want to look at immediately, you can double-click on the icon for that, the symbol, like here's Juniper. If I double-click that, it will take me to the seasonal chart for that stock, and it will highlight that trade that the Cycle Wizard found right there. So if I want to just real quickly look at an analysis of an individual stock off that list, I can go straight there. And then when I open up the list again, it takes me right back to where I left. One thing I'll caution you not to do is use this Print All Trades button, because when it says all trades, it means all trades for all 12 months of the year, both calls and puts. I saw that button one day, and I clicked it thinking it would print all of these trades, and I must have used half a ream of paper. So stay away from that button unless you like using up printed paper. All right, so we have saved both our calls and puts for October to separate user lists. Our next step is to start drilling down into these, and we want to narrow those 90 trades down to 5 to 10 that look promising. So let's start with our calls. Now, the first thing we want to do, here's our list of calls for October. We had 91 of them. So we know that every stock on this list was found as an up move in October, and I can see right here on the very first one, this is Apple. This is one we talk about a lot. This has been a very consistent move every year. And we can see these green clusters of dots. That tells us that's typically the time of year they release an earnings report. That's what these green dots are the quarterly earnings report periods. And so these are great moves or great trades to take, because we don't have to narrow down our entry point. We just find out what day they're releasing earnings, and we see how they typically react to that particular earnings report. Now, we could use our mouse, and it would highlight a trade for us there. It's a 10 out of 10, 10% average. That looks like a good move. But using our mouse is not necessarily the same trade that the Cycle Wizard found. Let me stop and explain this rating number real quick and why I don't like people focusing on it. This rating number is a combination of these factors above it. You take your win percentage times your average move of the stock and divide by the number of days. That's how we get the rating number. And if you look over here on tab 3, this is where you can tell your mouse how you want it to find trades for you. and you can see that your default setting is look for the best rating of whatever area I drag my mouse across. Well, when I use my mouse, all it's looking for is this one number. But when I ran the Cycle Wizard, I was very specific, 7 different settings, very specific on the type of move I want the wizard to find for me. So I want to find that move that the Cycle Wizard found, not what my mouse finds just looking at one number. In order to find that, we click over to tab 3. And if you notice down here in the lower window, we have trade dates. We have repeating moves and their entry and exit dates. And we also have a list of Cycle Wizard trades or Cycle Wizard charts that when we've ran the Cycle Wizard. Now the one we ran today was called the Training Cycles. So this is the trade we found today on Apple that the Cycle Wizard found based on those 7 specific settings. So that's the trade that I want to look at. And so all I have to do is click on that trade right there, and it will automatically highlight that exact move that the Cycle Wizard found for me. And it looks like it's probably about the same as if I had dragged my mouse. And 95% of the time it would be. Whether you drag your mouse or pick it off the Cycle Wizard, 95% of the time they're both finding the same thing. But there's that little 5% that your mouse might find a trade that's not quite as good as what the Cycle Wizard found. So I always like to go to tab 3 and click on the exact trade that the Cycle Wizard found. All right, so what information do we want to analyze here? Well, we don't just pick it because it's a 10 out of 10. That doesn't necessarily make it a good trade. We could have a stock that goes up the first 2 weeks in October, 10 out of 10 years, but if it only goes up 1%, we're not going to make any money on the option. So just being a 10 out of 10 does not make it a good trade. Well, what other factors do? Well, first of all, what's the average move? Well, we see this is a pretty good average. If the underlying stock moves 10% in 2 weeks or 3 weeks, what do you think the option is going to do on a 10% stock move? We can make a lot of money. But we want to go and look even further than that, and we want to look at the year-over-year consistency of this move. Just because it's a 10% average doesn't mean it moves 10% every year. And so we want to look at these individual years down here, and we want to see some consistency around that average 9-10%. Now this one looks pretty consistent. I've got several years that were 10% or better. I've got a couple, 3 years that were just under 10%. The only thing that would concern me on this one is last year it's only showing a 1% move. Now that doesn't necessarily mean that we couldn't have made money with this last year, because the chart is assuming that we stayed in from the 17th until the 4th of November. But what happened if the stock went up for the first week and then pulled back by the 4th? Well, between the 17th and the 4th, if we had stayed in the whole trade, it might have only been a 1% profit. But if we were actually in that trade and we were up 10% in a week and a half, and we see the price coming against us, we're going to sell out and take a 10% profit, right? We're not going to hang around to the 4th and lose 9%. And while I'm on that subject, these are not definite dates. This doesn't mean get in exactly on the 17th and hang around till the 4th. We're doing a composite of 10 years of information here. So there's no way the computer can tell us the exact day that the stock is going to start to move. Typically, I start watching my list of stocks about a week, week and a half ahead of this date, because some years they'll start early, some years they may start late. So when I see an anomaly like this, where I've got good consistency, but I've got maybe one of the recent years where it doesn't look like it was much of a profit, I want to look at that individual year. So if I just click on the date 2009, it's going to bring up the price movement for that 1 year. And if I sort of draw a line from where this green starts up to that year, I see that it did make a very good move real quick right there. But before it gets to the end or the into November, see, if I would have stayed in that trade, I would have lost all the profit that I would have had up here. Well, if I was live actually in that trade, I'm going to probably take my profit somewhere in here when I see this price starting to turn around. So just because it looks like last year was not a winning year, you want to drill down a little further and look and see what it actually did during that time period, because this tells me it still would have been a good move last year. It just didn't last all the way to the 4th of November. All right, so historically this looks like a very good move. I like the fact that it repeats itself. It's very close to the same percentage move every year, and it's done it every single year for 10 years. Well, now I want to see what's it currently look like. So that's when we have to go and look at our our 3-line chart. Again, I usually start with 6 months. And again, here you see the flash crash. That's not an anomaly. That actually happened that day. Actually, this is not going to be a good example. I'm going to switch around to some different charts here just to show you examples. We probably won't get an exact all the way through one stock, but I want to show you the examples of what you're looking for, trying to find all on the same stock. So when I'm looking at the current price activity, and again, I usually start with 6 months, the first thing I want to see, especially if it's not an earnings-related move, it's not related to that earnings report coming out, the first thing I want to see is that the stock has volatility to it. And there's a particular pattern that I look for. I call it the roller coaster pattern. And what that is I want to see that the stock is moving between these outer bands as many times as possible in a 6-month period. That tells me it's a big mover. I want a stock that tends to have a lot of activity. The other thing I want is a stock that tends to move in a wide range of its price. I want these lines far, as far apart as possible. So if I like the seasonal chart, I like the historical, and I flip over and I see a chart like this, I'm probably going to throw this one out because it really hasn't had much volatility, especially in the last 3 months. It's just sort of been trending. It kind of had a little dip and some volatility there, but then it's just been trending. So let me flip through and find you something that is a chart that gets me excited right there. That's the kind of 3-line chart I want to see. If my historical looked like that Apple trade, 10 out of 10, 10% average, very consistent year over year, I want to flip to a 3-line chart, and I want to see this kind of a chart. This one, just in the past 6 months, we figure it's coming off a bottom somewhere back here, so we would have had 1, 2, 3, 4, 5 different times in 6 months that it made the complete trip between the outer bands. And we also see that these bands are wide apart. Why is that important? Because that's going to allow us to go out of the money on our option. And that's going to be our best risk return, is playing those out of the money options where we're only paying for time. We're not paying any intrinsic value. And those also have the biggest profit potential, by the way. So for instance, if we were looking at a chart, let's say a seasonal chart said this was a seasonal put. This typically goes down the 1st of October. This one would look great. Not only does it have a lot of volatility, it's moving in a wide range. Right here, $41 up to about 47, almost 48. We figure that's about $6 on about a $50 stock. That's more than 10% of its price that it's been ranging in the past 6 months. And if we're expecting a seasonal 10% move, this has got plenty of room to do it because it's been doing it over the past 6 months. The stock's been moving 10%. We're expecting it to drop 10% based on our seasonal chart. So everything would be lining up. Now, we haven't looked at the seasonal on this particular chart. We're just pretending that it was a seasonal put that looked like that seasonal long on Apple. So if everything lined up historically from the seasonal chart, it had a good size average, 10%, 10 out of 10, was very consistent year over year. And we flip over to a chart like this where this stock has had a lot of price movement in a wide range, and it's currently overbought up here, ready to make a retracement, and we're expecting the 1st of October every year it does retrace. We're ready to start looking at strike prices at that point. And we're going to start watching this every day, and whenever we see this starting to come down, that's going to be our jump-in point. And so we want to have an idea of what strike price we're interested in before this starts making a move. We want to have that already lined up. So we start looking at strike prices that are within the range of its current 6-month movement, which means within the 3 lines. So for a put with the prices up here, we're going to want to look at strike prices no further than somewhere down here. Now, if we were doing a call and the price were down here, we're going to be looking at strike prices somewhere in this range. But we want to stay within our 3 lines again, because this is the range that the stock has had for the past 6 months. In other words, even though we've had 2 lows down here that have been probably around $39, currently that's going to be outside of our bands. And so we want to keep that strike price within probably this $41 range. Now, if we can get closer and it's not too expensive, I want to get as close as I can without feeling like I'm overpaying for that close strike price. So if this one were lined up for a put, our next step would be to open our option chain. And we want to look for puts on this. So we're going to click Show Puts. Now, picking your expiration month, I'm a little more conservative. Once we get within about 10 days or so of the current month expiration, I am willing to go ahead and pay for the little extra time to go out 1 more month. 2 reasons. Sometimes the move may last longer or start later and end later than we expect. And if we get right up to that expiration day, then we have no choice but to get out of position, whether it's still moving or not. So buying the little extra time, sometimes we can span that current month's expiration date and stay in the trade if it's still making money for us. And the other thing, which I'm not going to get into today, there may be some difference between the implied volatility, which has a very big effect on the pricing of the option, and typically the further month out, there's a little less volatility in the implied volatility than the current month. So what did we say our absolute maximum out of the money was going to be? About 41? Well, that really only gives us 2 choices on this particular option chain. We could pick the 40, which is just a little below where we want to be, or we could pick the 45, which is in a really safe area. That's our 2 out-of-the-money choices on this one. Well, there's quite a bit of difference in pricing. This one would be $40 per contract. This one's $110 per contract. Now, I'm willing to pay the extra for this one if my risk return is better than paying, risking less money here, but if I wouldn't make quite as much profit on a small move. Now, let's say we're expecting a 10% move based on that seasonal average of 10%. And the stock's been moving in a little more than 10% range right now. Well, a 10% move on a $40-something stock is about $4. So if it goes down from 50 to 45, we would think we'd make more money right here at the 45. Well, I can't really tell which one is the most profitable strike price just by looking at this chart. So what I want to do is bring up this what if, click this what if button. And what this does, it shows me a percentage gain percentage of profit based on a quick move. This would have to be an immediate move because this chart is based only on the delta. It doesn't have any time decay in here. I'm not going to go into the Greeks today. But I'm not so concerned with the actual percentage. I'm not going to expect to make 150% on this. What I want to do is compare those two choices that I was looking at up here. So I want to compare the percentage gain at the 45 strike with the percentage gain at the 40 strike, because there's quite a bit of difference in how much money I'm going to risk at each one of those levels. And when I look at the two percentages on a $5 move, again, 10% would be about a $5 move, so I'm going to be conservative. I'm not going to expect a $10 move on this. They're both about the same percentage, about 150%. So why would I risk $110 per contract to get in here when the same $5 move would produce the same profit but with a lot less risk, $40 per contract? So I hope that is clear, because that's how we narrow down. We know where to start looking at strike prices based on the current range of movement on a 6-month chart and these three lines. We know what our parameter is. But when we look over here and we've got several choices of out of the money, we want to pick the one that has the least risk but still has a great potential for profit. And so I'm not going to risk almost 3 times as much money. It's not going to make me any more profit to take that extra risk. I'm going to go ahead and pick this 40 strike, and even if it only moves down to 45, this is telling me that if the move happens quick enough, I'm still going to make the same profit, but I'm only risking $40 instead of $110. So that's sort of a walkthrough of the whole 6 steps and how we get to the point of actually selecting strike price. Now, what we want to do is we want to go through this whole list that we built for our October calls, and we want to analyze each one of these. This is why I don't want to start with 2,000 stocks at the beginning, because I may end up with 300 trades I have to look at, and that's too many charts. It's overwhelming. Typically, if we start with 700 to 1,000 stocks, we're going to have enough trades in any given month that we're going to be able to find 5 to 10 that fit all of these conditions we're looking for. Not only the conditions on the current price movement. Again, we're looking for that volatility in a wide range, price in the current position, or looks like it may be getting to the current position. We also want to analyze the historical movement on these. And again, we want to find that trade that the Cycle Wizard found for us, and not only look at how many years it made the move, but we want to analyze the consistency down here. Because some of these, let me find one. I'll show you one that's not a consistent move. Look at this one. This looks good up here, 9 out of 10, almost a 7% average, right? If that's all we were looking at, we would say, hey, this looks like a good trade. But look down here. It's all over the board. We got 3 years that are double digits. We got a whole bunch of 1s and 2s down here. So these double digits are actually skewing our average up here. So you've got to pay attention to, to the consistency. Now, I wouldn't even waste my time highlighting the individual years here, because there's so many of them that were small moves. And again, this is looks like one I ran on a 7-day cycle, which reduces my probability even further. That minimum 14 typically is the lowest number we use to get a decent probability on the move repeating. So we're not only looking at the price movement currently, and I've had people that fall into this trap. They find the really nice roller coaster in wide range, and they just start trying to trade that movement, and they forget to see, well, what does it normally do this time of year? You know, if you're trading this, you say, looks like a good time to buy a put. Look how overbought it is. But if you weren't paying attention, what does it normally do this time of year? Looks like it shoots up. So we've got to analyze the information off of both charts. We've got to look at the historical price movement. Was it consistent year over year? And is it currently in a good, volatile, wide range pattern in the price in the proper position? If all of those things line up, that's when we start looking at maybe strike prices, and that's when we put that one on our watch list. And I go through this process myself, as I said, about every 2 weeks or so, until I've got usually 5, 6, 7 stocks that I can start watching for the next couple of weeks to catch the next move. So let me quickly review, and then I'm going to open up you guys' microphones so you can directly ask me some questions, because I haven't been watching what you typed in. Our 6 basic steps, we start with the stock screener, and we screen out at least using our basic 4 conditions: options, exchanges, volume, and price. We want to get this list down between 700 and 1,000 stocks usually. Save those to a user list. Take that user list, run it through the Cycle Wizard, make any adjustments depending on what type of moves we want the wizard to find for us. And the first couple of times you go through and practice this, I like you to use these default numbers, because I want you to learn the process first before you get into experimenting with changing conditions and numbers and everything. So the first couple of times, just use this 1445, 490, 555. We select the list that we screened out. There's our 700. Run the Cycle Wizard. Pay attention to how the numbers populate. That's going to tell you what type of market to expect going into the next month or two. And so typically, if we're going into this October, November, I'm usually not looking for puts for the next 2 months. I'm looking for a lot of calls, because that's usually a bullish time of the year. And then once that's finished, we want to view the results, save the results to user lists so that we can start analyzing each one of these. And then we just go down the list looking at charts. And we want to be flipping back and forth between our 3-line and our seasonal. And when we find one that looks like it's a good candidate for our watch list, we may even be ready to start deciding strike prices on these. And strike prices, again, we know where to start looking based on the range that it's been moving. So that tells us how many choices we have. To narrow down between those 2 choices, we bring up the what if, and we see that why would I risk, and you can see this is in October, so, oh, actually this is the call. All right, I'm going to open you guys up.
Unmuted.
See if you have any questions. And I know I'm going to get a little bit of an echo, but it's not too bad.
So basically, if we go back to the Apple chart, I was kind of looking at that one through one of the scans already. You're using the 6-month 3-line chart as verification as opposed to a 12-month. And so we're looking for Apple to do an up move, but it's already outside the 90 percentile. That really is not setting up to take a good trade.
Yeah, that's a good question. Because sometimes I will flip back to a 1-year chart if something looks okay on this, but again, this is probably a good example because it's already overextended way up here. I may want to see what it looks like on a 1-year chart because that is a really strong move on Apple this time of year. And even on a 1-year chart, it's near the upper band, and it's way above a 1 year. It's reached a 52-week high at least. And this may be an all-time high. Go back and it pretty much is an all-time high.
Yeah, so it has a couple weeks to pull back, but the probability of it is not going to be real good for it to pull back to say the 252, where you would have an entry point for the next up move.
Yeah, well, it doesn't necessarily mean I wouldn't still be interested in a trade in this. What it might force me to do is play it a little closer to the vest on a strike price. Because, if the seasonal move on this was 10%, I think this one actually was about a 10% average. If it's already at an all-time high, guys, I am going to mute this while I talk. If it's already at an all-time high, I may not be able to expect a full 10% move this year. But the move has been so strong and consistent historically. I think this was the same trade. It's been so strong and consistent historically, and you know, if I've gone down here and done this little analysis, yeah, it was still a good move that year. And by the way, this doesn't tell me that it was a 10% move from here to here. These percentages are only based on the percentage between the annual low and the annual high. This right-hand scale, the 0% is the annual low for that year. The 100% is the annual high. That's the only way we can layer one year over the next, because as you saw on Apple, you know, it's done nothing but go up for 10 years. So we can't compare this year to 2001 based on price, totally different price points. So the way we get these seasonal charts is just its price movement throughout the year from wherever it hit its low to high. So again, you can't say that, oh, this was about 82%, this was about 92%, that was a 10% move. That's not what this scale is telling us. The only thing we can tell about the movement on this seasonal chart, and especially when we're looking at the composite yellow line, is if it's a steep slope, it tells us that it was a very quick move, because we do have a time scale down here at the bottom. So the steeper the slope, the shorter the time period, but we cannot tell how big of a price move this was during the year based on this chart. But if we've gone and done a little drill down into these individual years, and we see that it still had a move within this time period, but some years it started retracing before it got to this end date, that tells us this is a very strong pattern, a very strong pattern. And so even though it's currently at an all-time high, it's been such a consistent pattern, we might still expect it to make some sort of a move during that time. But I may want to play it closer to the at the money, because this is not where I would prefer to see the price at going into that trade. I would prefer to see the price down here going into a call. And again, we don't have the three lines now to help us determine where to start looking for strike prices either. We're already outside of the range we would normally want to be looking at. And so I wouldn't necessarily not take a trade on a seasonal this strong, but I definitely would play it a little more conservative on the strike price. Okay, I'm going to unmute you.
Understood.
All right. Any other questions?
And then obviously we could use secondary verification, you know, with thinkorswim charting and moving averages, you know, in combination to say, you know, just since Apple's there, you know, the late August move. And you
Yeah,
can take
absolutely.
That
best choice is your setup software. I tell people that you know, I have people ask me, well, how does your software compare to XYZ software? And it never matters what other software they're looking at or what other software they're using. I tell them they're totally different programs, because most of the software programs out there, and there's a lot of good ones. I've got customers that use VectorVest and AbleSys, and there's a lot of good programs out there, but those are technical analysis softwares that help you determine when to get into a trade, when is the stock right to enter, and then watch for your exit. But there's no other software that tells you which stocks to be using that on. Best choice is your setup software. It tells me which stocks I need to be watching in October. And I use the analogy of, you know, of tools. Best choice is a tool. And just like if you went down to Ace Hardware and bought a brand new hammer, you don't bring that hammer home and throw out your saws and screwdrivers. You add it to your tool collection. And so when Best Choice gives me my watch list of setups, which stocks I need to be watching for October, typically I am flipping over to my thinkorswim to look at my indicators for entry and exit. Because as I said, Best Choice has never been designed to be a premier charting software. It's a setup software. It's giving me my setups of the stocks that I want to be using my technical indicators on. Does that answer your question?
Yes, it did.
Okay. Let's see. Let me quickly show you where to find those other recorded webinars. As I said, I've just covered the basics today, but in terms of maybe using some of these other screening conditions here in the Blue Wizard and learning how to use these settings in the Cycle Wizard without going overboard, because sometimes changing one of these numbers can drastically affect your results, and if you don't have a good understanding of what you're doing, for instance, if you change too many of these numbers at once, you're not going to be able to tell what difference in results or what affected the difference in your results. You've changed too many of the variables. A good example I use of this is I had a guy trained one-on-one one time, and he did some homework and sent me, was supposed to send me 2 or 3 trades that he picked out. Well, he got very frustrated, sent me an email, said he couldn't find any trades. And I said, well, tell me what you're doing. Send me an email and tell me, what are you settings are you using in the search Blue Wizard, and what settings are you using in the Pink Wizard? Well, he had put in a minimum average of 25% down here. He wanted big moves. He was looking, to hit the home run the first time out. And I had to explain to him this is an average move of the underlying stock over a 10-year period. So the reason you're not finding any trades is because there's no stocks that average a 25% move in the same 2-week period every year. That's why you're coming up with 0 trades. So before you start, getting too crazy with these settings, I like you to go through, as I said, and use the default settings. These are the numbers that Pete came up with when he first developed this, and these are still very good numbers to use. But there are certain ways you can change these numbers to find, for instance, more put opportunities in those months that the market tends to be more bearish. By just changing a couple of numbers here, you'll find double or triple the number of downward moves. And I have done webinars that go into a little more of that advanced use of both of those wizards. And you'll find those if you go to our website, bestchoicesoftware.com, click on the forum section right here, and if you've never been to the forum, you need to register first. Go in as a new user, make up your own username and password, and then once you've done that and gotten registered, you can come back in as a returning user. And it'll first make you log in with that username and password. I have mine set to log me in every time now. You can do that the first time you log in. And if you go down here, you can see there's several different areas where people are, sharing ideas or trying to contact technical support and so forth. But down here at the bottom, we have a section called Coach's Corner. And there's one for each of the 3 of us. You go to my group right here, Stan's Traders Group. Click on that. And you'll see right here in the middle it says Traders Group Recorded Webinars. Click on that. And there's the 4 webinars that I have recorded. Each of these are about an hour long. And what I've done in each one of these, I've done one of 2 things. Whenever there have been new features added to the system, I will spend at least part of that webinar explaining the new features. And then I usually try to do part of the webinar on maybe some different types of searches you can do for the current time of year. For instance, in January I did one on finding those good earnings moves. The one that I did, I believe, in July, no, it was the one in August, is the one where I showed some of the different settings on the Cycle Wizard by changing just 2 numbers on the Cycle Wizard from the default numbers. You can find 2 to 3 times more put positions. Again, you don't have to be drastic in changing those settings. Just changing 2 of those numbers will find you many more put positions. And I believe that was the webinar I did last August. I haven't done one of these since January. I'm thinking about doing another one here in the next couple of weeks, and I'll notify everyone. These are all always free webinars that anyone's free to join in on, and typically I try to keep them at about an hour. But I usually have some sort of a topic for that particular time of year, and how to use Best Choice a little bit differently to help you with your trading. Okay, you're live again. Any other questions, guys?
Extensions again. Can you go over that real briefly?
Sure. I don't use this a lot. I don't use the extension lines a lot. Again, most of the time when I'm looking to get into a trade, what was that one that looked really good? There it is. Most of the time when I'm looking to get into a trade, I'm looking at maybe a 2-week move, 3-week move. So I'm able to set my strike price based on the current price position. But sometimes you'll come across a chart. Let's see if ADM is one of those. Let's look up one of them. See if Conoco. And this is not the best example. This is ConocoPhillips. A lot of the oil or energy stocks, you'll see a longer move here in the spring. A lot of times you'll come across these energy sector stocks, and somewhere in March they'll start trending up, and some of them go all the way up to July. So I would use those extension lines if I were looking for those options 3, 4, 5 months out, because that's when I need to determine a longer-term strike price. But if I'm just looking for a 2-week move, this is going to give me all the information I need to set a strike price for 2 weeks. So originally, going back to the program settings here, right here, option extensions, this is a fairly new feature. We've just until a few months ago, we didn't have the ability to change this. Originally, it always went out to whatever the furthest strike or the furthest expiration was, which typically is about 2 years out. And what Pete had it set up to do was take a long-term chart, a minimum 5-year chart, click on the extensions, and it's going to take us out to whatever the furthest out leap is, which this one would be January 2012. And so based on extending that price direction out for another 1.5 years, then we got a better idea of setting strike prices that far out in the future. Now, being able to adjust how far this goes is a new feature, as I said, and I have not played around with it, but my theory would be, and I just need to spend some time playing around, my theory would be typically I'm not going to be going out more than maybe 3 or 4 months in an intermediate term option. So I would want to force maybe a 3-month or even a 6-month time frame on a shorter term chart than 10 years. So I would want more of an intermediate chart to start with, maybe a 1-year or 2-year. And then force it out in 6 months if I were looking at maybe a 3-month out expiration. Because again, I'm not looking to get in quickly and be in for 2 weeks and get out, so I need a little bit longer look into the future, basically, is what those extensions are built for. Now, let me explain what the lines are. I didn't cover that a minute ago. The blue lines would be calls, the pink lines would be puts, and the 3 lines of each are showing you in the money, at the money, out of the money, and for calls, in the money, at the money, out of the money. And so this is helping you determine, and I personally would probably be a little more conservative and probably pick something along the at the money line further out here if I was looking for a call. If I were looking for a put on this, I'd probably pick something along the at the money to try and stay as close to these three lines as possible. Okay, does that answer your question, Mark?
Yeah, it was just a benefit, and it sounds like it's something to play around with, but maybe it's kind of a work in progress, and maybe if we get into a longer term trend one direction.
Right. Yeah, but most of the time, at least for my trading, I'm looking at getting into a trade in the next few weeks and just being in for a few weeks. So my main decision is, do I take the current month or the next month out usually?
Fair enough. That's everything's been great. Appreciate the education process here.
Well, you guys go through it and run through these 6 steps. Actually, I will email you an outline of the 6 steps that I covered today, and then you'll also get a recording of this so you can kind of go back and watch the details. But go through the 6-step process a couple of times using the basic 4 on the search and using the default numbers in the Cycle Wizard, just to get used to that 6-step process. And then kind of when you've got that pattern down, then you can get into playing with the different numbers and different search criteria. My feeling on the Blue Wizard and screening out stocks, I would rather look at the chart myself rather than have the computer screen out stocks for me. For instance, using something like volatility. You can set it to find stocks that have wide bands of volatility in a 6-month time period. But if the computer screens stocks out, then I never get a chance to look at the actual chart. And I may see something that I like that maybe the computer just screened it out based on that one condition. And so I like you to have the 6-step process down before you start going in and really trying to experiment too much, because once you understand the 6-step process, you'll have a little better idea of throwing in these other search conditions and so forth. And so I'll email you that outline of the 6 steps. Go through that process once or twice, and if you want, you can send me some homework, pick out 2 or 3 that you think have good-looking moves coming up, and I'll take a look at the charts on them and see if there's anything maybe that I missed going over with you. Sometimes things pop out to me on the chart immediately, and I think, oh, I forgot to tell them that. So if you want to, and I know, Jim, you haven't licensed yours yet, and I think you said you're getting ready to go out of town. So just whenever you get back in town, get licensed and review the CD. I'll have a CD out to you this week of this recording. And at any time down the road, and any time in the meantime, you guys have questions, feel free to call or email me.
I don't have any more questions, but thanks, Stan.
The general office.
Okay, Jim, I'm sorry, what was your question?
Do you have a direct number for contacting you, or just go through the office?
No, let me give you my direct number. It's 941-749-1739.
Thank you.
And you should have my email address from the invitation I sent you today, but the email is just Stan J, first name, last initial, at bestchoicesoftware.com. All right, guys. Well, if there's no more questions, I'm going to stop the